probably are familiar with that. So what I'm going to try and do is cover a few things that look at effectively the what's actually happening today. We say there's not enough going into this. Where is the money going? And then try and touch a little bit on some of the opportunities, just picking out a couple of the key things that I think give sort of some of the justification as to why we should be focusing more on investing in resilience. So Barclays research team produced some research at the end of last year that looked at some of the key things that we're expecting investors to be focusing on. And you can see we've broken it down: Europe, US, and Asia. When you look at some of the themes that are coming up on this, you can see that the themes around resilience and adaptation are very much in focus. Looking at physical risks, biodiversity, which comes across with 3 green dots, meaning it's very much in a focus for them, and looking at things around sort of the costs associated with the transition as well, came out very strongly. So clearly investors are looking at this, and this looked at both equity investors and debt investors, and really looking at those that have a strong focus on sustainability and incorporating that into their decision-making processes. So what's actually happening then? What are we actually putting money towards? Well, start off on the sustainable bond markets, on the debt side of the equation. In fact, not just the bond market, the full sustainable debt market, we've got the loan market here as well. If you look at the chart, you can see that numbers have come down a little bit over the last couple of years, but we're still looking at in excess of $1 trillion worth of sustainable debt per year, which is a really significant amount of capital. It kind of comes to probably normally around about sort of the 10% mark of the total market. Obviously not enough, but we're getting there, we're making progress. Our guess is that 2024 we're going to see something similar to 2023. So we're not going to be seeing that tail off. That tail off is not a lack of focus on sustainability. I want to make that clear. That's a sort of broader trend in just the declining amount of overall debt being issued. If you look at the share of sustainable versus the rest of the debt market, it hasn't actually changed that much. And it's not a finance conference, so I won't bore you with the reasons as to why. But I think that's an important thing to think about. Now, when we look at that, you can see the bottom blue colour is really the most significant part, and that's your green bond universe. When you start breaking that down into what are the different green projects that are being funded through these instruments, you see one very striking thing. Mitigation gets a lot of focus. It's where a lot of the capital goes to, and themes around adaptation and resilience are significantly less. It's partly because of just the nature of these projects and the fact that they're smaller typically. It's harder to sort of disaggregate that spend. If you build a solar plant, for example, and as part of your thinking around how you design this, you also factor in some sort of resilience and adaptation measures, you're not going to split that out. You're just going to take the cost of the solar plant. You're going to put the whole thing under the renewable energy category because it makes life easier. So maybe there's a little bit of hidden numbers in there, but I think that we are still definitely seeing that in that share of that, whatever it is, about sort of $650 billion in 2023, that's not as high as it should be. If we look at the equity side, and for the equity side, I've included the climate technology space. So this is really your earlier stage technologies, more or less. We're looking at really that sort of technology-focused piece. And you can see here, this is from Bloomberg, the differences in the sectors. And again, looking at this analysis, energy is clearly very, very significant. Transport, you're not going to have anything really around resilience. That's electric vehicles over there. And then some of the sectors like agriculture, which probably are going to be where you can get a bit more of this, looking at things like gene editing of crops to make them more resistant. That's getting a real fraction of the capital. Presenting it in a slightly different way, and I really like this chart from PwC. If you look at where the emissions are actually coming from, and you look at where the money's going to, there's a clear mismatch. So again, we're seeing that capital possibly not going to the most impactful areas. Mobility is the bit that drives it, that's electric vehicles, because this includes things like Tesla and all the rest of it that just basically gobble up capital and are able to raise more money. It'll be interesting to see their next version of this study, given the challenges we've seen in the electric vehicle landscape over the last year, and whether these numbers start